Greetings, everyone. This is Richard Krivo with our chart reading session for July the 9th. And as I mentioned in previous YouTube videos, I plan on doing a chart drill down like this once a week or so for those of you who are interested, so you can get a feel for how I like to analyze the charts each day to look for trading setups. It's been more than a week since we've had a drill down, but sometimes holidays and my life outside of trading sometimes gets in the way a bit, and that's fine because you can't be totally focused 100% of the time of trading because it's going to burn you out. Now, at the present time, open trades on currency pairs that we've stalked on this drill down process. I personally do this drill down process on a daily basis, and we're going to talk about how potentially you might be joining me on that if you like going down the road. But those trades that we've identified or I've identified in this daily drill down process, they're up roughly 570 pips since the first trades that are still open triggered back in mid-June. Other trades that we have been in, they've been stopped out for losses on the smaller side. Some have been stopped out profitably on the larger side as we've trailed our stops. And as you likely know, as this market, the currency market ebbs and flows, we try to enter trades on pairs that are trending. We try to ride those trends for a while, and then through proper trade management, we take our profits and losses as they come. And the bottom line is, right now, our open trades are net profitable. Obviously, that is our ideal outcome. This will not always be the case, as there will be losing trades, and sometimes those losers can outnumber the winners. And we should judge ourselves not on a day-to-day basis or a trade-to-trade basis or even a week-to-week basis sometimes. We have to look at how are we doing over the month? How are we doing over the quarter? That type of thing, especially when we're engaged in longer-term trading strategies, which is what this is all about. Now, as we go through the charts, if you have questions about how and why my charts are set up the way they are, please reference the YouTube video entitled Chart Tutorial, which was posted on May 11th, and also feel free to email me with any questions at RKrivoFX@gmail.com, as it says on the slide. And we'll try to get through as many of the pairs as we can. I'm talking kind of fast because I want to get as much in, and try to get through as many of the pairs as I can. And if you have any questions, again, feel free to email me if something is missed or you feel I left something out and you want it clarified. Okay, let's get those disclaimers out of the way here. And trading foreign exchange involves significant levels of risk, may not be suitable for all investors. Traders should only trade with risk capital. Don't invest money that you are not in a position to lose. The high degree of leverage can work against you as well as for you. The content provided is for informational and educational purposes only and is not intended as specific trading recommendations. Yeah, I in no way guarantee or imply that any setup that you see in this video will result in a winning trade. That's not just reality. That's not reality at all in the trading world. My goal is to teach you how to trade so you don't have to rely on anyone else as you continue along your trading journey. And under that heading of teaching you, if you want to learn more about what I'm doing here, how you might employ some of these strategies, if you're looking for a one-on-one type of mentoring, email me, RKrivoFX@gmail, and put 1 and 1 on the subject line. And what I do is I use this daily drill down to identify pairs whose price action is moving in such a way as to identify them as higher probability trades, not guaranteed trades, just trades that have a greater likelihood of success. So we go forward in the exercise. Keep that in mind, that we're looking for trading setups. Setup is just that, a setup, nothing more. May or may not trigger. If it does trigger, it may or may not produce a winning trade. These setups put the probabilities of having a winning trade more in our favor, and that's what we're looking for, higher probability trades, higher probability entries. Okay, let's take a look at some charts here. Let me get this out of the way, and there you can see my charts. Like I said, go to the May 11th, I believe the date is, video if you want more of an explanation on how and why these are set up the way we are, or the way they are. Okay, let's take a look at, got a weekly, daily, 4-hour, and a 1-hour chart. And just looking at the Euro-USD currency pair here, and we can see on the weekly chart here, the pair is in a downtrend. It's been moving down. It's made a higher high right here on the weekly. It's equaled that high over here, but hasn't taken it out yet, hasn't touched the upper downtrend channel. and we have slow stochastics in kind of a neutral position here. On our daily chart, price action has touched the upper channel and has taken out the lower channel, which gives me a kind of a selling bias, if you will, on the particular pair. So I'd be looking for selling opportunities on this particular pair, although it would not be my favorite one. This is just the most widely traded pair, so I bring this up oftentimes. I go through personally all 28 currency pairs myself, and then what I do is I kind of select the highest probability ones to trade, kind of, you know, the old expression about just cherry picking, and that's what I'm looking for. I go through all 28, I narrow it down to maybe whatever the market has to offer that day. Maybe it's one pair, maybe it's 5 pairs that look to me pretty good. Some days it's no pairs. There are days when I don't take a trade, and that's fine. And this is one that I would put on the side burner, you know, for right now, or, you know, the back burner. Let's take a look at the Aussie yen currency pair here. And one of the things I do before I drill down the charts each day is I do a strong week analysis. If you want to learn more about that, email me, say strong week analysis, I'll let you know. And the Aussie yen is a pair we can see here that it has taken out on the weekly chart the lower channel. We've got strong angle and separation on slow stochastics to the downside right there. So that is an indication that potentially this pair has more room to drop. Obviously, nothing is guaranteed in the markets. And we see where it's been making lower highs and lower lows nicely on the daily chart. So obviously, in this particular situation, we're looking for opportunities to sell the pair. And on the strong week analysis that I do every day, the Aussie is a -5. Meaning it's the second weakest currency that's out there right now, and the yen is the strongest currency. Yeah, Aussie yen. Okay, so we're moving to the downside here, and what I'd be looking for, we see that it pulled back here. Let's expand this hourly chart here so we can see this. We can see it pulled back to the upside nicely, moved down, and right now, if this candle is going to close in about 9 minutes, leaving a nice long wick behind it. So it looks like potentially it could have come up and equaled the top that it put in at 91.02, the resistance level at 91.02, roughly 91.02 right there. So in this situation, I'd be looking, me personally, I'd be looking at maybe placing a price alarm at the 89.18 level. That's the level that equals the previous low. If it takes out that low, there is a higher probability that the pair may continue to the downside. Now, a very aggressive trader might consider setting a price alarm at this level here, 89.98, roughly in that area, within a few pips either way, 89.98, because if price would take out that level, you've got roughly about 63 pips before it hits its previous low. So there is that potential. And when I say setting a price alarm, as far as setting a price alarm on whatever charting package that you have, you could set a price alarm, which is what I do. Come take a look at the situation on the charts, see what might be transpiring, because the way that this chart looks right now, by the time when and if price would move down to that lower level, that 89.18 level down there, the configuration of the charts may indeed have changed a bit. So we definitely want to take that into consideration, which is why I like to set a price alarm as opposed to simply setting an entry order at that point and then entering, because the situation could be dramatically different than than it is right now. Okay, let's take a look at another currency pair here. We talked about the Aussie yen. Let's take a look at the New Zealand US dollar. And we've got the New Zealand dollar as the weakest currency and the US dollar as the second strongest currency. So again, we've got a nice downtrend because the New Zealand dollar has been weak for quite some time. And we can see how the pair has been moving dramatically to the downside over the weeks. Ever since back on May 23rd was the first week where price action took out the previous low, hasn't looked back, just continues to move down. We have a situation here where we've got a little bit of a retracement on the daily chart, but in neither situation has it taken out that upper Donchian channel. So based on the Donchian channel strategy, we are in an open sell kind of situation, which means I'm looking for selling opportunities on a lower time frame chart. And so I can go down to, let's say, for example, the 1 hour chart here. Let me expand that one a bit for you. Okay. And what we'd be looking at here is for price action to come back down, and it's been making higher highs and higher lows on the 1 hour. It's going through a retracement, obviously. And we'd be looking for price action on the Donchian channel strategy to take out the low at 0.66, looks like 21. It's kind of blocked there a little bit for 22, about 6622 right in there. And it may or may not do that. If it does, okay, it will be a higher probability situation. So I'd set my price alarm to see what's going on at about 0.6622, right in that vicinity. Again, a more aggressive trader might set a price alarm at this level at 66.99, call it 6,700, right in that area. And potentially, if that triggers, we could have a move down about maybe 60 some odd pips. And what I'm looking at here is if from this point right here, I like this level here better than the one I just showed you over there. From this level, if you look to the left, right over here where my cursor is now, you see nothing but green candles. In other words, there's no support. Now, that means the pair has quote unquote room to run if it takes out that low candle right here at about 66.86. It's unimpeded to the downside at that point, which is great. It's got room to run. Does that mean that once it hits that point, it's just going to drop like a rock? No, but it does have the room. It's a higher probability situation, not a guaranteed situation. So the New Zealand US dollar is one that I'd be interested in monitoring and setting a price alarm on that to see what might transpire there. Now, I was working with some clients just the other night. They asked me to take a look at the Aussie New Zealand dollar, and I did. And at that time, the pair was in an uptrend on both the weekly chart, uptrend definition being higher highs and higher lows. And we can see that the pair had moved down quite a bit today. In fact, it touched, just has tagged that lower Donchian channel line. So it's in a unique situation. On the weekly chart, it's in an open buy scenario because it's making higher highs, higher lows, hasn't taken out the lower channel line. On the daily chart, higher highs, higher lows, but we've had a situation where now it's making lower highs, lower lows, and has ever so gently taken out that lower Donchian channel line. And slow stochastics here is open to the downside. So at this point, a more aggressive trader, because you've got conflicting charts. You've got a longer term chart here, a weekly, saying it's a buying situation. You've got a daily chart here saying it's a selling situation. So if you're aggressive, a trader could enter if price takes out the previous low at roughly 1.1023. I said enter, I meant set a price alarm, at that point. Because if price action continues to drop and takes out, let's go to the 4-hour chart for this, it's a little better example. If price takes out that low, and look to the left here, we've got some nice long green candles. There's an opportunity for it to drop on this 4-hour chart about 268 pips roughly. Now this was a news announcement here that caused this to happen, that caused the Aussie the Aussie New Zealand pair to spike up at that point. But still, there's no support in there. So the potential for a drop is there. Will it drop? Don't know. Only time is going to tell. But I would set a price alarm right around that 1.1025 level just to see what's going on at that point. Okay, that's about all the time we have for today. So feel free to email me with any questions that you might have about this analysis or any trading questions that you might have. RKrivo, KRIVOFX @gmail.com. Thanks again for listening to these videos, and I will be sure to keep them coming. Thanks.